Welcome back. In this section, we will talk about the auction and why any tradable markets on your screen is a process of auction. Prices move based on buyers and sellers, how they react, who's more active. So we will focus on the auction and how do we see the auction visually on our chart or screen. Before we dig in any deep information, we need to know first what is an auction. The auction is a public sale which goods or property are sold for the highest bidder. As yourself, how the public behave in case of a product sale and when prices rally for the same product. Let's shed some light here. The auction basically, if you have an auction, we have a product, let's say product X, and we have an auction here. We can see the bidders. And as we know, any auction process ends based on the highest bidder. So once the auction starts, for example, this product X starts the auction with $1,000. Auction starts, the investors start bidding higher and higher and higher based on how they value this product, and the investors with the investor with the highest bid, the one who gets the product. This bid 50, this guy 5,000, this investor bids 10,000, this investor bids 50,000, one investor came 70,000, and there's no any other investors can bid above that. So eventually the highest bidder is the investor who will get the product X. Based on auction process. The trading market is actually the same process, but the only difference is the tradable markets is an auction between buyers and sellers, not only buyers. In our case here, we have only buyers who are bidding higher, but in any tradable markets, we have buyers and sellers at the same time. And that's why, of course, we had a view in the intro on how prices move. And based on that view on how prices move, these are our buyers and sellers in our markets. And the side that has more size or bigger activity, that always dominates the market and moves the market in their favor. So in any market, if there's more sellers, they will move the market down. If there's more buyers, they will move the market up. And this is basically the auction process. The first thing we need to know about any auction or any product that trades on any market, that everything has a value. Everything has a value. This value dictates if the prices are high or low. So if you are trading only the candles on any chart, if you're, for example, let's just hide the volume profiles on our screen here. If you're a person who trades the candles only based on candles movement, you have to know first that these candles only represent the results of what happened. The candle only shows you that the price moved from this price up to this price or from this price down to this price. But it never shows you how it moved from this point to this point. Because if you don't understand the mechanic of any candle, how it moved from one price to another, you actually trading blind and you don't see the auction, because it makes all difference in the world if you only see the candle, the result of what happened, because the candles at some point becomes historical data. If you don't see how the price moved, you can never predict the future events after that. So the candles only show you the result. This is why you need tools and you need perspective on how the auction work and how prices move, not after the movement. So speaking of auction, we have to figure out the value of our product. Let's talk about value a little bit before I move on to volume profile and deeper discussion. Let's take an example. You as a person, let's name someone X. This is person X. Now this guy X has $1,000. He wants to buy a TV worth $1,000. We have the TV in the markets, and this TV brand Y, for example, $1,000. It never goes up, doesn't go down. People buy this TV for years for $1,000, and this person goes to buy the TV for $1,000. He goes to buy the TV and he finds that the TV is on sale. The supplier offering this TV now for example, $600. Let's make it smaller to make the sale efficient. Let's say he made the TV for $400. So person X went to buy the TV for 1,000. He found the TV worth only $400. So based on psychology and emotions of humans, usually people buy more of cheaper products. Let's say this guy has 2 bedrooms and now he has opportunity to buy TV instead of one. So because of that sale, the supply goes lower than usual because the customers are buying even more and more and more based on that sale. People find this is cheap, people can buy more with their buying power, so people start buying more, and the more increase in the demand on this product with the cheap price, at some point this product will reach a point at a low inventory. And when the supplier reach a point of low inventory, he will lift the prices back up from 400 to 1,000. And the opposite happens. If the same TV now price goes up to $2,000, this person will choose to buy the TV expensive, or most probably he will try to find another brand. And based on that, this product will reach a point, there will be no demand because of the high price. So the supplier will drop the price back again to the 1,000. So in both cases, prices went down or went up. Supply and demand dictates that the price will always go back to the value 1,000. What do we take out from this? Prices always go back to value. If I can identify a value of a product, a specific product, now we have an edge that we can run a business. You have to understand the people who buy the product at the value, the people who actually want the product to use. If we're speaking about the stock market, the people who want to buy something at a value, the long-term investors, for example, they don't care about the small price movements. They want to make dividends. They want to make a profit from earnings and so on and so forth, long-term investment. But who actually, the people who are running the business, in the business of trading, who wants to make money, you cannot buy something at a value because I don't need the product to use for myself. I need to make money. So if I buy this product for 1,000, I sell it for 1,000, I'd make zero profit. So in order for me to have a successful trading business, I have to learn to buy and short away from value, because I know there is a price movement towards this value will make me money. For example, if the prices drops below value and I know what's the value of the product, now it's the time to buy cheap. And when the prices goes back to value, I sell my product and I make the profit. On the other side, if the price goes up and I see the price now is way higher than the value, I start selling my position to make profit, or I take action like shorting in the stock market, shorting to make profit. And if you don't understand what is shorting, you can make money both ways in any trading market, by buying or shorting. Shorting, you make money when the prices go down. Buying, you make money when the prices go up. So basically, the broker offers you this service of borrowing you the stocks or the contracts to short and make your profit range and return these stocks back. So it's the opposite of buying. Anyways, let's focus on the auction right now. We have to wait for the price as traders to go to be away from value to be able to make money. So now we understand what is the auction, how psychology works, supply and demand, how all this affect. The main takeaway from here that we have to identify the value of any market for us to be able to make money. And this value is our bread and butter in any tradable markets, whether stocks, forex, or futures, anything that can lead us to the value. So a quick story. When the markets moved from the pits before the screens, investors used to trade the stock market in a pit. The broker stands in the middle and the investors stand around and they start bidding and asking, and their interaction start moving the prices. When the Nasdaq decided to move the trading process into the screens, 90% or most of these traders and investors retired. They said it's impossible, it's different, because when you're standing in an auction, physical auction, you can see who's buying, who's selling, you can see the interaction, you can easily predict if the prices go higher or lower. But when things move to the screen, on the charts, and people now trade from their own bedrooms and their own offices, they don't see the auction, so it was not reasonable for all traders to continue trading because their edge is gone. But guess what? Technology also brought us tools to see the auction and to interact with these auctions. And these tools are basically the volume profile. This is the tool that shows us the auction process. This is the tool that shows us how prices move from here to here. The candles only show the results of the price movement, but the volume profile shows us the auction process that caused the price to move from here to here. And this is what are we going to talk about in the next session. So what is the volume profile? The volume profile basically is a histogram of the amounts bought and sold at a specific price levels as opposed to specific times, allowing traders to evaluate and value prices and track auction process. To understand the volume profile, you need to learn the following values to start: the point of control, the high volume nodes, the low volume nodes, and the value area, which we call the initial balance. Of course, I don't want to focus on technicals. I want to take things visually so you can understand what is volume profile all about. So what do we see over here? This is my trading view platform. Anyone can open a trading view account and look at charts. This is not a broker. This is basically a charting website, technical analysis. So what do we see over here? This is the Nasdaq chart futures, the Nasdaq futures. And what do we see here is a full day of trading. The market started trading over here at this point, and the day finished here. So this whole period is a 1 day, and I'm looking now at the 5-minute chart. It will not matter what time frame I'm looking at. The time frame here will only change the candle structure, but will not change the volume profile structure. So what are we looking at here? This volume profile. This is the histogram that shows us the transactions happen on any price. So what is the value? As we discussed, we will come back again to the value topic. If I'm talking about value, what builds the value? What builds any value in any trading market? The only thing that builds any value in any trading market, the amount of transactions happen at a specific price. Let's say we have Apple stock here, and we have prices from, let's say, from 10, 9, 8, 7, 6, 5, 4, 3, 2, and so on. And let's say now we have a value area at 6. What does it mean we have a value area at 6? Value means the most amount of transactions between buyers and seller happened at the price 6. Means people are accepting the price 6 to transact and buy and sell this stock more than comparing to any price on the chart. And this is what we see here. First, this area here, what do we call? HVN. Amount of transactions, huge area of transaction happen. And as you can see here, this is also an HVN. HVN is a high volume node that shows you a big amount of transactions happen at this price range. And that means, what does it mean? It means acceptance. It means there is a value here. So we see this is the biggest HBN, and there is another HBN here, and another HBN, a lot of transaction at these areas. Okay, let's look at what's next. The LVN, the low volume nodes. The low volume nodes, as we can see here, these areas that has a very, very low transactions, which reflecting these prices that the public are rejecting, are not accepting trading at it. So we have HVNs, high volume nodes, a very high transactions, acceptance, people trading consistently at these prices. And we have LVNs, low volume nodes, where the traders or the public are rejecting or refusing trading too much at these prices. Number three, the point of control, or the POC, or the main value price of the day, which is set automatically by your volume profile. It shows you the most amount of transaction at price. So the value of such a day like this is this price at 14,946. This is the POC. This is the value of our day, because this is the price that has the most amount of transaction comparing to any price traded during the day. Now we have three pieces of information that can tell us a lot about the market we are trading: HVN, LVN, and the POC, which is the point of control, which is the main value of the day. Okay, let's get to translate this volume profile based on candles. The candles show us the result, the volume profile and auction show us the process, or the how prices move. As you can see here, the areas of LVN, this is where the public reject the price. So there is two behaviors at these LVNs, whether the price will reject it as a support or resistance, or the price will cut through it quickly and move ahead from this range. The market will not stay at these LVNs. And as you can see here, this LVN over here range, what happened? What happened this range? The price rejected, the price cut through quickly, rejected, cut through quickly, and we have rejection, we have rejection, we have direct rejection, and then the market went up. So this LVN, the market treats it as a support or resistance based on which side we are trading. Another LVN here. It's a small one. As you can see, rejection, market came, another rejection, market came, cut through, did not stay at this price, and continue and showed another strong rejection at this volume profile. So what's the LVN? Areas where the public have no interest to trade at these prices. It's always rejecting, and that gives you an indication of what the market will do next when we get to those LVN areas. Next, the HVN. Comparing to the LVN that shows rejection, HVN always will show acceptance, such as this range over here. We can see an HVN at this range of prices. And as you can see, the price and the candles loving it. The price loving this HVN, it's acting as a value. People find liquidity in it. People can buy and sell without any lack of liquidity. So the price always likes the value. One of the value criteria, like the POC, the point of control, or the HVNs, that it works like a magnet. It attracts the price, and the market loves to stay in these HVNs or the POC. As you can see here, HVN. And as you can see, comparing this small HVN to the big main HVN, the price here stayed longer. The price here has more liquidity than this one. So you can tell now when the market moved from this liquidity, it moves straight ahead to the big liquidity and stays on it and builds the value. This is POC, where the market likes to rest, where it acts as a magnet to the prices. So now we understand the auction, and now we understand the basic of applying a volume profile on any chart, how to read it, how to extract information on how prices moved and why prices moved in this kind of behavior. Rejection, LVNs, acceptance at HVNs, and the value, the main value. The main value shows the most amount of transaction that happen during the day, that tells you that this is the biggest magnet during the trading day. So let's take this. Now we talked about the POC, the most traded volume at specific price, high volume nodes arranged within the chart representing a high volume activity, value area, which is the full area of the value. This is the value area, which we call initial balance or IB. The range of prices, the price levels that contains 70% of the total volume trading during the day. Low volume nodes, LVN, arranged within the chart representing the last volume activity. And this is what we just discussed right now. So if you are using TradingView, how to use the volume profile indicator, go to chart, click indicators from the top menu. On the left navigation bar, select volume profile, select one of the of three available options in the middle navigator bar. Let me show you visually. You have it here, indicators. You have the volume profile. And if you want to see every day, today, separate volume profile, you can use the session volume and then apply it, and you will be able to see your volume profile. The best adjustment for your volume profile on TradingView is to set it as I'm sitting over here. Inputs, make the row size 400. The volume, always keep it total. The value area, keep it 70. I like to keep the color unified for my volume profile, so I unified the color. I use the width of the box 26, and this is what works for me. But you always also can adjust. You can adjust your colors. You can adjust the volume profile size. But I like to see the small details. This is why I use the options here, the adjustment that I'm showing you right now. So that's the volume profile, value area, HBN, LVNs. And I will attach there is a lot of auction terms and a lot of volume profile terms, but for trading, we basically need the main three terms that I just discussed right now. I will attach the market profile terms in a sheet attached to this course, so it can help you read more and educate yourself more about auction terms and more of these technical terms.